Bitcoin is the most secure blockchain. The blockchain security that Bitcoin provides, the hash rate that Bitcoin blockchain has, which shows the security and the difficulty to break the security of Bitcoin blockchain, and the network effect, the number of miners that Bitcoin blockchain has. On top of it, the proof of work consensus mechanism that Bitcoin blockchain runs upon is the most decentralized and better tested consensus mechanism out there. The proof of stake mechanism, which other blockchain like Ethereum runs upon, or other consensus mechanisms, are not yet proven. Also, they have much lesser network effect. They have much lesser security. They can hold much lesser assets in terms of in a secure manner. So the only proven, battle tested, secure blockchain and consensus mechanism today is Bitcoin blockchain with proof of work consensus mechanism.
Welcome back to the podcast. Today we have the pleasure to interview Mithil from Velar. And before we jump into the protocol and talk about the technical details and how you're trying to introduce DeFi within the Bitcoin ecosystem, could you please tell me a bit more about yourself and your journey into Web3?
Sure. Thanks, first of all, Ivan, for having me on your podcast. It's a pleasure. So I'm Mithil Thakore. I'm co-founder and CEO of Velar. I have been in crypto since 2017. Since actually I graduated from my university, I'm a computer science graduate, and since then I have only worked in crypto. So crypto is kind of my home. Velar is my third business. My first business was a smart contracts auditing platform for EVM chains. I was running it out of India. We became number 2 in the world in number of smart contracts audited. I sold that business. I exited that business and started a hedge fund. It was a crypto-focused hedge fund where we used to trade Bitcoin and Ethereum perps. It was a liquid, actively managed derivatives trading desk where we used to trade on leverage Bitcoin on perpetual contracts on centralized exchanges. It's one of the reasons we started Velar, and it's because a lot of centralized exchanges, they started going down in 2022, and people started losing trust on centralized exchanges to give custody of their Bitcoins to those exchanges. And it also affected hugely our hedge fund, which we were running, and we lost over 90% of our AUM within a month around when FTX and BlockFi went down. So we I thought as a long-term solution, the only way to sustainably grow crypto is to build DeFi on Bitcoin, where people don't have to give their custody of their Bitcoin to centralized custodians like exchanges or like FTX or BlockFi, and also they don't have to bridge their Bitcoin onto smaller chains like Ethereum or Solana through bridge Bitcoins like WBTC, which are much less trusted. They are also centralized in a way. So it's one of the reasons we started building Velar as a one-stop DeFi solution and a DeFi liquidity protocol on Bitcoin.
And you guys enable seamless swaps, trading, and you're trying to introduce DeFi into the blockchain ecosystem. So could you just tell me a bit more about the challenges that you face? Because my understanding of the Bitcoin ecosystem is that the majority of the people there tend to be Bitcoin maxis, or the main reason that they got into crypto is because they were firm believers that the dollar is losing its value, so they wanted an alternative source of money, and they see Bitcoin as digital gold. And companies like Velar, I keep getting the name wrong, so apologies for that. But you're trying to introduce DeFi and this kind of new narrative to people that might have different understanding of the entire and appreciation of the ecosystem.
Sure. So I think we have to take a step back and understand what Bitcoin is. So I see Bitcoin as two different things. One is the Bitcoin coin itself, which is considered as a digital store of value. Like a lot of ETFs are holding it now, and a lot of countries and states are holding it now as well. That's digital gold. The second aspect of Bitcoin, which is even more interesting, is the Bitcoin blockchain, on which the Bitcoin coin runs. So the Bitcoin blockchain is the longest running blockchain since 2009. It's the most secure, most battle tested blockchain, which uses proof of work consensus mechanism, which is also the most secure and decentralized consensus mechanism out there. So there are two use cases of Bitcoin. One is using Bitcoin coin as a digital gold, but the second use case, which we at Velar are exploring, is that we want to make this Bitcoin blockchain the base of entire financial infrastructure, which will run parallel to the centralized financial infrastructure and banking in future. So this is a very long-term vision, maybe 20 to 30-year vision, where at Velar we want to see an entire parallel financial infrastructure built, similar to how centralized banking work, including day-to-day banking, including stocks, commodities, or traditional banking, everything. We want to run it on the Bitcoin blockchain in a decentralized and non-custodial way. So we are not competing with the banks. We are not competing with centralized systems. We are just trying to build a backup option and another parallel option to run entire financial infrastructure in a decentralized way using Bitcoin blockchain. Now, on top of this, Bitcoin, the coin itself,
Sorry,
is
before we,
currently one.
I'm sorry to interrupt. Before we move to the coin, could you elaborate a bit more on how you use Bitcoin or you ensure that Bitcoin become this new financial infrastructure? And many might ask themselves the question about the 10 minutes block time. So how are you planning to overcome that challenge? Because I think the Lightspeed network is probably one of the solutions that we can have, or L2s on Bitcoin. But the initial challenge that any developer is facing is that Bitcoin is very challenging to change, and that's by design, and that's how many people perceive Bitcoin. So could you just elaborate and double down on that aspect of it, please?
Sure. So Bitcoin blockchain is has limited capabilities. It is slower in comparison to other blockchains. Um, Developing on it is impossible because it doesn't have inherent smart contracts like other blockchains like Ethereum or Solana. But you can build an ecosystem around it. But what Bitcoin blockchain provides is a secure is a secure chain, a secure database where once you store data on top of Bitcoin blockchain, it cannot be edited, deleted, or tampered. So, how you can build a financial infrastructure around it is by using layers. Is what I think is the best solution, where you use layer two solutions around built around Bitcoin, which uses the security of Bitcoin blockchain, but they use their own set of smart contract capabilities. They bring their own set of scalability solutions where you can run different DeFi applications, you can run different use cases and build this whole financial infrastructure around Bitcoin blockchain while keeping Bitcoin blockchain as base and using the security of Bitcoin blockchain. So the keyword is using security that Bitcoin blockchain provides and using the database that Bitcoin blockchain provides, and you can scale around it in layers. That's the solution.
Yeah, and could you also compare Bitcoin to other existing L1? So why did you decide to build on top of Bitcoin? Is it because of the TVL, or is it mainly because of the security and the decentralization component?
So there are two reasons for this. One is the fundamental ethical reason, and one is a pure business financial reason. The fundamental ethical reason is that Bitcoin is the most secure blockchain. The blockchain security that Bitcoin provides, the hash rate that Bitcoin blockchain has, which shows the security and the difficulty to break the security of Bitcoin blockchain, and the the network effect, the number of miners that Bitcoin blockchain has. On top of it, the proof of work consensus mechanism that Bitcoin blockchain runs upon is the most decentralized and battle tested consensus mechanism out there. The proof of stake mechanism, which other blockchain like Ethereum runs upon, or other consensus mechanisms, are not yet proven. Also, they have much lesser network effect. They have much lesser security. They can hold much lesser assets in terms of in a secure manner. So the only proven, battle tested, secure blockchain and consensus mechanism today is Bitcoin blockchain with proof of work consensus mechanism. That's the reason we chose to build upon Bitcoin. The second reason is the financial reason, where Bitcoin blockchain has 1.5 trillion dollars worth of Bitcoin running on top of it in a secure way, which no other blockchain has. Ethereum is much less, Solana is much smaller, and the assets on top of them are also much smaller. So want to use, if you want to scale DeFi in general, if you want to scale decentralized finance in general, you have to incorporate Bitcoin into DeFi. But until now, the entire DeFi was running on top of Ethereum, Solana, and other L1s, and they were not using Bitcoin. So there was Bitcoin is around 50% of entire crypto market cap, but that 50% was sitting dormant and not being used in DeFi. All L1s, there are hundreds of L1s, hundreds of L2s, L3s, which is a relatively new term now. I don't even understand what it means at the moment, but so many DeFi products, like thousands of DeFi protocols, they were all working to cater 50% of crypto market cap, which doesn't include Bitcoin. So, and the reason why Bitcoin was not involved is because the Bitcoin holders, they understand that the security of these chains is much lesser than Bitcoin blockchain. So they wouldn't move their Bitcoin from the original Bitcoin blockchain to this smaller chains. But if you build L2s around Bitcoin, where L2s use this security of Bitcoin blockchain, and you can and they are not running their own security models, so they don't have to worry about security, then this large Bitcoin holders, including institutions, retail, everybody, OG Bitcoin holders, will use their Bitcoin in DeFi if there is a ecosystem of layer 2 solutions, which is called L2, build around Bitcoin, which uses the security of Bitcoin. So by building DeFi around Bitcoin on L2s, not only will we attract the current Bitcoin holders, which will more than double the entire potential of DeFi, because entire DeFi was focusing on 50%, but now the other 50%, which was sitting dormant, can be used in DeFi on Bitcoin. But also because Bitcoin blockchain is much more secure, much more accepted in on a global scale, on a scale of countries, you will see a lot of institutions also participate, traditional institutions, traditional users, banking users participate if you build DeFi on Bitcoin, because Bitcoin shows trust. Bitcoin brings this trust which no other blockchain brings to the table. So with so what that's what we are doing at Velar. We are building a suite of DeFi products with Bitcoin finality. So what we do is we build different DeFi products like dexes, perp
Sorry,
dexes.
before we move to the products, I would like to go through the technical details.
Sure.
And when I was reading the white paper, I realized that many of the names come from like Hinduism. So I was really interested in the link between blockchain and the names that you assign to some of the versions. So could you just tell me a bit more about the V1, and the code name of it is uh
Velar Dharma.
yes, sorry, I actually have it noted down, and I've written how to read it, and I was still struggling with it. So thank you so much for that. But I know that that's a key concept in Hinduism, and the idea behind it is that to be able to maintain a balanced life, you need to have like this universal order through rigorous like living and rituals. So could you tell me a bit more about the association between that concept and the V1, but also a bit more about V1, the technical details there?
Sure. So we necessarily don't have a link of the version names of Velar, which are like we have four versions planned: Velar Dharma, Artha, Kama, and Moksha. We don't necessarily have a connection of blockchain to that, but it was kind of a philosophical reason around what we were building and what we were trying to build. So, like how I said, we have set out at Velar to build an entire parallel financial infrastructure with Bitcoin blockchain as base. So, what these four versions represent are the four virtues and four goals of each human life, like you said. And it starts with Dharma. Dharma is basically basically curing, understanding what hunger means, and understanding basics of life. So what we are doing at V1 is basically trying and testing if this dream that we have, this goal that we have, is even physically possible. So that's why we in V1 we started with basic DeFi products like a simple Uniswap inspired DEX, which is a AMM which is automated market maker based decentralized exchange built on top of a Bitcoin L2 called Stacks. So we started with a basic DEX, which is a simple, most simplest form of DeFi product you can build, on which you can swap between different tokens, you can farm different tokens, you can put liquidity in different tokens, which is a simple DeFi product, which we built around March last year. And at that time, there were less than 5,000 total users on entire Bitcoin ecosystem. So what we did was we tried to test it between a global set of retail users, global set of institutions, and when we did a test of it, we received 165,000 users within 6 weeks of our test net. So in Velar Dharma, we were trying to test the market that is even DeFi on Bitcoin possible, if it's feasible technically, and if we build it, will users actually use it? So what we realized in Velar Dharma was that there is real demand of people who want to use their Bitcoin in DeFi. Until now, no, for 14 years before Velar began, Bitcoin was in existence, but nobody tried to build DeFi on Bitcoin in a scalable, sustainable way for retail and institutions both. So what we did with Velar Dharma was test the waters. Velar Artha is basically what Artha basically means in version 2 is that you understand the hunger in Velar Dharma, and you cure that hunger for yourself in Velar Artha, which means you build resources, you generate revenue. That's why in Velar Artha we have a little bit more complex products. After we tested out the market in Velar Dharma, in Velar Artha we have a perp dex, which is a complex derivatives product where people can trade on Bitcoin blockchain different assets using leverage. Of course, that brings a lot of degen volume, that brings a lot of risks as well, but it will attract more institutions, it will attract more users it will attract hedge funds, it will attract uh, institutional traders as well. So this will generate a lot of revenue. This will be a real test of Bitcoin ecosystem at scale. That we will be able to cater to millions of users, including retail and institutions. So Veranartha is that where we actually build a scalable ecosystem around Bitcoin, and scalable DeFi products to cater to millions of users, both retail and institutions.
And could you go through the rest of them? Hammer is the next one.
Yeah,
Is like
uh,
what's
there
the
are
aim there?
sure. The meaning of karma is to cure hunger of others, which means once you have understood the basics of life through dharma, you use in artha you basically solve those problems. You basically achieve those uh, and fulfill those duties for yourself by taking care of yourself. And in kama, you take care of your surrounding, which means you take care of the world. You cure the hunger of the world. So kama is basically building products uh, which are much broader and much bigger than Velar itself. Of course, I can't disclose the products we have upcoming for Kama, but Kama will be uh, more social products, more broader, societal beneficial products. And moksha is to get over the hunger, which means moksha is to basically you attain moksha as in your soul has attained has reached God. There is no going back now. You don't feel hunger anymore. You don't have to worry about it. So at moksha moksha is a very long term vision that we have, that we will build the entire financial parallel infrastructure similar to how banking today operates. So it is a very far-fetched 10-year vision. We don't even technically know what how it will look like or what it will means, but we have a like I have a dream that in 20 years, like I am not married now, but like my kids, when they grow up as a teenager, they will have a choice to either go into banking and get into the banking system, use credit cards, traditional banking, or they can choose never to have a bank account or never to go into a centralized system and they can run their entire day-to-day life, all finances, investments, uh, trading, day-to-day financial needs, everything on the Bitcoin blockchain. So that is moksha, where you attain the freedom of not being not being dependent only on centralized systems and only on trust based systems. You will be able to choose between a trust based and a trustless system. So that is what moksha represents here.
Nice. I love that. I really enjoy that explanation, and I was trying to do a bit of research and connect them and understand them because I don't know enough about Hinduism, but that was really good, and I definitely like the links that you've done between religion and blockchain. So just to bring you back to Dharma, and you mentioned the exchange based on Bitcoin. Could you explain the journey of the user there and why should they do it on Bitcoin than anywhere else? Just a comparison. Actually, first of all, sorry, there is two questions, a bit convoluted, but could you just explain a bit deeper why do we need it on Bitcoin right now?
Sure. So why we need on Bitcoin right now? So it's step one. Of course, it's a short term to medium term goal for us, not long term. But we want to bring Bitcoin into DeFi, which will allow, because if you see, more than this is like given data that more than 70% of crypto users hold Bitcoin in some form, like in large or small quantity. So if you see, most crypto users, they hold Bitcoin, but they are not using that Bitcoin. The Bitcoin is sitting dormant. Like Ethereum, you can use it on, you can use it to in DeFi. You can stake it and earn yield on top of it. But Bitcoin is sitting dormant. So we want to make Bitcoin more productive using Velar Dharma and Velar Artha. We want to build products where people can use their Bitcoin in DeFi without worrying about uh, security and custody. Now you can build it on Ethereum or Solana or other L1s, but those are not Bitcoin secured chains. So the security of these chains are much lesser than Bitcoin, and the problem there is the problem that can happen potentially is that if you move over a certain amount of Bitcoin to, for example, Ethereum or Solana or Polkadot or Aptos or Sui or any other L1, it is possible because Bitcoin market cap is so huge that the amount of Bitcoin bridged on those chains can be much bigger than the security budget of those chains, or can become much bigger than the chain itself. Now, if that happens, then the validators who are running that chain might be in a conflict of stealing those Bitcoins, which is again a risk. So the only way to to scalably bring Bitcoin to DeFi is to bring Bitcoin into Bitcoin native environment based DeFi. That's why we are building DeFi and DeFi apps like AMM, DEXs and perp DEXs in the native Bitcoin environment, where people don't have to bridge their Bitcoin out of the native secured Bitcoin environment into other chains or into anybody else's custody.
Okay, and could you tell me a bit more about the Perps X and explain that to me a bit further and how people can utilize it and the benefits of it?
So PerpDex is kind of an extended version of the DEX that we have built. The only difference between a DEX and a PerpDex in Velar is that you can trade leverage. You can trade using leverage. So if you have $100 and if you want to trade assets worth of $1,000, you can do a 10x trade on the PerpDex. You cannot do on the DEX. You can only do a simple swap. You can swap between different assets. But on PerpDex, you can bet on an asset going up or down, and you can trade leverage. Now this has so many use cases. This has retail and institutional use cases both. Of course, it is more risky because you can also lose a lot of money. So it's not a financial advice. It's a derivatives financial instrument which is for experts. But there are lots of institutions who are holding a lot of Bitcoin. For example, they can hedge using perp dexes where they can try to long or short Bitcoin, and they can hedge their current Bitcoin holdings. They can hedge their portfolio. That's what a lot of institutions do in stock markets as well. So what a perp dex allows you is to run much more complex index funds, much more complex in financial institutional systems around crypto. So this will not just allow retail users to like degen trade and go 10x 100x leverage and either make a lot of money or lose a lot of money, but it will also help institutions to run their businesses, ETFs sustainably, and give better returns to their users. But also not just that, uh, perps inherently are the main markets. So today perps, like centralized exchanges based perps like on Binance, on other exchanges, they account for 80% of entire crypto volume, which means that if you like fundamentally, if 80% of crypto volume happens on perpetual contracts on centralized exchanges, means that the price of Bitcoin is determined by perps as well. Now Bitcoin being inherently a non-custodial decentralized blockchain, why do you want its price to be decided by a centralized exchange? So perp dex on Bitcoin also allows you, in future will allow you, once it scales, it will take a few years, but once it scales, the price discovery of Bitcoin can also happen on Bitcoin itself. Like that is the goal. Like the whole point of Bitcoin being created was that we should never depend on centralized systems. It doesn't mean that centralized systems are bad, but if we are building an entire decentralized financial system, then everything around that system should happen in a decentralized way. So because today because today perps and derivatives markets are dependent on centralized exchanges, once you bring decentralized perps, decentralized derivatives markets on Bitcoin, then you won't have to rely on centralized exchanges as much.
And could you just elaborate on the challenges of having perps on centralized exchanges? Because my assumption is that it might be easier to trade and the volume might be able to match, so the pool will potentially be a bit higher because you would need MMs for uh, decentralized perps and to be able to create that pool.
Sure. So the main problem is custody. When like most of the centralized exchanges, they are offshore based. They are not properly regulated. They are not as secure. Like how we saw in 2022, where FTX, the second largest crypto exchange with over $20 billion in assets, went down and people lost money there. Over $20 billion. It's not a small amount. So when you give your Bitcoin to a centralized exchange and to trade on perps, you are still giving your Bitcoin away to centralized exchanges, and you don't know what happens with that Bitcoin. The whole point of Bitcoin was that you should promote non-custodial and self-custody and decentralized nature. And centralized exchanges are completely opposite to that core thesis of Bitcoin. So security is the main reason. Of course, there are other benefits and disadvantages as well. Like benefits, like you mentioned, is much faster because it's centralized. It's much easier to scale. It's much faster, and it's good user experience, low latency. But I think it will take a few years for decentralized perps like Velar, Eartha to scale to that level. So of course, like at this point, there are some advantages and disadvantages. But for example, if you are holding a large quantity of Bitcoin, would you rather trade on something that's decentralized and you are holding the custody of your own Bitcoin? So you trade on Velar Alpha Perpdex, or you would give that Bitcoin to exchanges where you don't know what's happening with that Bitcoin. You don't even know if the exchanges have that Bitcoin or not, unless you try to withdraw, and something like FTX happens where they just cannot process the withdrawal. So that's the thing.
It's like something that I've been trying to understand for some time, but I'm struggling to wrap my head around it. So I know that the liquidity providers for the MM exchanges get a fee based on the transactions that have been executed within the pool, but also if the price of the assets that they initially commit moves up or down, there might be some discrepancy and therefore they might lose some of their money, especially when we talk about pairs. So let's say we have BTC and ETH pair, and we have 100 ETH and 50 USDT worth of Ethereum, of Bitcoin. So if the price of Bitcoin or Ethereum goes up or down, then you would need to be able to balance the pool, you need to sell one of them. So could you just explain that to me and how that works? What's the mechanism behind
Sure.
it?
Sure. So liquidity pools on dexes and perp dexes works in a different way, where liquidity pools in dexes, they are just swaps. So you just there is a certain amount of BTC, for example, and USDT, and people either put in USDT and take out BTC, or they put in BTC and take out USDT. So that's why the discrepancy happens, because the pool can be the pool ratio between BTC and USDT can be different from the market. But on PubDex, the one that we have, we just we just take real time prices from using oracles from the market. So this discrepancy doesn't happen in the PubDex as much as in the AMM. So that's the difference between AMM and a PubDex. On PubDex, definitely liquidity providers uh, they can lose money if there are ways there are they can lose money potentially in different ways, but of course there are risks involved, and any kind of reward comes with a risk. So the risks are there in some form, but the risks are different from the AMM. So the impermanent loss issue that you said exists in the AMM. It doesn't exist that much in the PubDex, but there are other risks in the PubDex for liquidity providers. But the also the volume of transactions on PubDex is so high that the risk sometimes is worth for liquidity providers to take for the reward that they are getting, which is also much higher than the AMM.
Okay, thanks for explaining that to me. Yeah, that's the word I was looking for, impermanent loss. When the price of a certain asset is fluctuating. Could you explain to me a bit more about the coding language and the Velar, as in I know it's built on stacks and it's written on Clarity. So could you just explain a bit more about these technical details, and what was the thought process behind it?
So, uh, so Stacks is one of the Bitcoin L2s around Bitcoin blockchain. There are now over, I think, 70 or 80 Bitcoin L2s. We work with a few of them. We work with three Bitcoin L2s for now, but we are very L2 agnostic in nature. Velar is the application layer built on the multiple Bitcoin L2s. So the first Bitcoin L2 we started working with was Stacks, which uses its own virtual machine and its own um, coding language called Clarity, which is different from Solidity, which you use in EVM or on Ethereum. But the other Bitcoin L2s coming now, they are much more compatible to EVM. So you can use the same coding languages that you can use to build on Ethereum. You can build it on Bitcoin now using the EVM Bitcoin L2s. So actually, our Velar Dharma AMM is built on stacks currently, but our Velar Perpdex that is currently live, it's live on Bob, and it's going live on BitLayer very soon, which are EVM compatible Bitcoin L2s. So we can just use Solidity language which you use on Ethereum to build to build on those Bitcoin L2s.
And when you say that you're an L2 agnostic, could you explain to me how do you decide what L2 to incorporate or build on top of? Because I'm not 100% sure of what are the differences between the L2s within the Bitcoin ecosystem. I spend a lot of time reading about Ethereum, and I know the difference between the L2s and Ethereum, but it's something that I need to amend in the near future and spend more time reading about the L2s and Bitcoin.
Yeah, so the Bitcoin L2 space is very new compared to other L1s like Ethereum or Solana. So so there are great Bitcoin L2s coming, and most of the difference they have is either in maintaining Bitcoin finality, or in a way how they bridge Bitcoin or other assets Bitcoin between Bitcoin L1 and their own L2. So this is the difference, but it's both of these technologies are currently under development. So it's very early to say which Bitcoin L2 is good or which Bitcoin L2 will win. But but uh, but of course, like the way we choose to work with Bitcoin L2s is based on is based on multiple factors, and but it's also difficult for us to make the right decision at this point because it's all very early.
And do we introduce any security risks when we have this L2s on Bitcoin? Because what like, yeah,
Hmm.
could you actually tell me, because I was going to trying to explain what are the security risks associated with it. But could you explain the security risks of having L2s on Bitcoin?
So the security risks, there are I think two security risks. One is the transactions will happen on Bitcoin L2s. So how you basically without tempering that transaction, you maintain the database of the transaction on Bitcoin L1, because once it's gone on Bitcoin L1, it's secure. But until it's gone, until it's registered on Bitcoin L1, there is a risk to temper or to edit or to create issues with the transaction. So how they maintain transactions is one of the security risk. The second security risk is how I see Bitcoin L1 is like a safe. It's like a electronic safe where you put your valuables, where you put your cash, where you put your documents. So Bitcoin L1 is kind of a safe where you store your Bitcoin. But Bitcoin L2s will be kind of when you want to use those assets or documents or valuables, you take them out of the safe. So you have to take Bitcoin out of L1 and put it on Bitcoin L2 and use it in DeFi. So when those assets are on those Bitcoin L2s, they have to maintain their Bitcoin L2 security also. So this is another security risk where the assets which are bridged from Bitcoin L1 to L2, they have to maintain security in the most optimum and most secure way as well. Otherwise, those assets can be at risk. So these are the two risks which are involved from a user's perspective. From a builder's perspective, it's different, but from user's perspective, these are the two main risks that all users should keep in mind while choosing which L2 they are trying to use.
When I was going through the website, there were like four main features, and the final one was the non-custodial design that you're offering. So could you just explain a bit more about that? I guess it's in comparison to centralized exchanges.
Sh- um, sure. So like I said, we want to focus on the decentralized nature. We want to. So we are basically very much aligned with the thesis that Bitcoin was initially designed with. So Bitcoin was designed with the thesis that uh, that that uh, that finances, people should be able to run finances in a decentralized way, in a non-custodial way, where they don't have to trust a third party with the custody of their coins, and it should be decentralized where the transactions shouldn't be decided if it's true or not by a single third party. So it's decentralized, and it's secure. And decentralized way and proof of a consensus mechanism is the most secure and decentralized consensus mechanism, and that's what we go by. That's why we are building on Bitcoin. So those are just like key thesis, base thesis that we take while building anything that we build on with Velar.
Yeah, and just a final question: what are you hoping to achieve by the end of this year and by the end of next year?
So by end of this year, we will have our perp decks live on at least three Bitcoin L2s, which will be like it's already first perp decks on Bitcoin, but now it will be first perp decks on three L2s, and we will also have our decks live across multiple Bitcoin L2s, and also we have a new upcoming business launch called Velar Launchpad. It will be part of Velar Labs, where we will incubate a few Bitcoin focused startups and help them go to market, and help them launch their product and their other services.
Okay, and what about early next year?
Well, early next year is early next year is I can't disclose. We have some big surprise coming, but let's just focus on we have a lot on our plate to focus on for this year, so we are just focused on that.
No, no, absolutely fine. So we should definitely have you on the podcast early next year to tell us more about the roadmap, and what we should expect through 2025.
Definitely,
Um,
would love to come over again. It's been a great conversation, Ivan. Will be fun to come again.
nice. And just a final one: where can people find you?
So
What's
we are
your
very much active. Yeah, our social media team is probably the most active social media team in Bitcoin ecosystem. So I mean, our website is velar.com. Very simple, and You can find us on Twitter on Velar BTC. We have a Telegram group of over 8,500 people with the name Velar BTC. We have a Discord with over 20,000 people named Velar BTC. So we are very active on all our social media. If you reach out to any of our team members, they are very active in reciprocating and solving any doubts or issues that you have.
Nice. Thank you so much for your time.
Thanks, Ivan. Thanks. It's been a pleasure. Let's do it again soon.
Okay.